I would say any quick commerce company to me is like an organized retail business, right? Like in the back end, you have multiple stores, you have to manage inventory. Every store might have a different need based on the catchment area in that business. If you can elaborate on the framework to look at any vertical quick commerce company.
One of the key parameters is the buying frequency in the category. In my mind, at least it is once a month. The second aspect is immediacy in the category. That aids the go-to market.
There are certain verticals in which the buying experience is very different than a catalog-based buying experience. For example, in a grocery, right? You're buying the same ketchup every day, but in fashion, the back-end inventory keeps on changing. So it's a much more complex business also.
Often the answer to why a vertical quick commerce should exist is there a specialization needed in that category which the horizontals will not be able to do?
And what about businesses like Firstcry? Is that not a challenge that they might do this?
As we are also investing and we have invested, I think that threat is always there. And needless to say, in this category, the offline market size is huge. So even if you can take a small share of it, I think you can build a large business.
Assuming the returns are lower, do you think this is a profitable business anytime soon as a category or not as much?
I think hello everyone, welcome to Interstellar. The topic for today is vertical quick commerce opportunity in India. I had recently written a blog a few months back, and that had got a variety of comments and messages. And Rahul encouraged that we should maybe do a podcast on it, and here we are.
Mayank, all your posts are very thoughtful, but this was an additional element it was also contrary and controversial. So I thought, instead of putting my comments in the comment section, might as well bring it out in a more open discussion for others to see as well. See, vertical quick commerce, like I would say any quick commerce company to me is like an organized retail business, right? Like in the back end, you have multiple stores, you have to manage inventory. Every store might have a different need based on the catchment area in that business, except for the fact that the buying piece is more online. So you're buying on an app and the store is coming to you versus you going to the store. So having said this, Mayank, I'm very curious, if you can elaborate on the framework that you use to look at any vertical quick commerce company.
Yeah, I feel that three fundamental questions need to be answered to assess if a category is fit for a vertical quick commerce play. The first point is this category a quick commerce category? Now, the next question is what makes a category a quick commerce category? One of the key parameters is the buying frequency in the category. As a part of quick commerce, the customer is getting the convenience of quick delivery and could be sacrificing other value propositions. So till the time there is enough buying frequency in the category, the convenience of quick delivery is not as exciting. Now, the next question that might be the case is that, what is the benchmark for frequency? Now, again, one doesn't know, but in my mind, at least it is once a month, if not few times a month. The second aspect which makes a category a quick commerce category is immediacy in the category. That aids the go-to market, because if there is immediacy in the category, for example, in grocery, if you run out of fruits, vegetables or spices, you are not okay in getting it after 2 to 3 days, you need it now. Or if you run out of diapers and wipes, you need it now. So immediacy in the category helps as a go-to market. The second fundamental question or point two is even if the category is amenable to quick commerce, why will the horizontal platforms like Blinkit, etc. not win? Why is there need for a vertical specialized player to exist? Often the answer there is that, is there a certain specialization that is needed for that category to succeed, which horizontal will not be able to replicate? An example of that will be fashion, that we'll talk about subsequently. The second is if the category is such that it has a long tail of selection, that the proxy that I have in my mind is if the Pareto in that category, which is 20% selection, which leads to 80% of the business, is also a few thousand in number, if not few tens of thousands of number, very, very unlikely, it will get a space in horizontal's dark store, where there is a brutal fight for space. with the horizontals optimizing for gross margin per square feet. The third fundamental question is that, okay, categories, quick commerce amenable, maybe vertical can exist. Will the economics work out? Now, I think economics, the way I think of it is there are two parts of economics. One is order level economics, second is store level economics. Now, order level economics are predominantly a function of three things: average order value, gross margin, and cost of delivery. Cost of delivery further is a function of the catchment for the category. And the second part is store level economics, which is the store has to generate enough throughput to recover the fixed cost of rental, overheads, etc. Now, store throughput is in turn dependent on three factors. One is again the catchment. Second is the density of addressable household in that catchment, which will order that category. And third is, what are typical annual spends in that category by that household. So all of these three will have a bearing on the store throughput for that category.
Got it. If I may add, maybe it's an extension of your second point only. I do feel that in addition to these 3 points, the buying experience, there are certain verticals in which the buying experience is very different than a catalog-based buying experience. Like when you buy grocery or electronics, you're buying from a catalog. But if let's say, for example, you're buying fashion, right? First, you need an inspiration on, what should I buy? What will it look like on me? Which occasions will it be good for? So a lot of content first inspiration is needed. Second, the category itself is slightly different in the sense that you're not buying, like one particular item might have 5 different sizes and 10 different colors. So how you go about choosing that product? The back-end inventory, as in unlike let's say again grocery, right? You're buying the same ketchup every day, every time. But in fashion, the back-end inventory keeps on changing. So it's a much more complex business also. And that might be also nuance to your category point, that what is so different about this particular category.
No, absolutely, which is the second question, and I should probably elaborate more. Often the answer to why a vertical quick commerce should exist is there a specialization needed in that category which the horizontals will not be able to do? And I think you gave a variety of examples of specialization in fashion category.
Yeah. And see, I think the other piece I would say is that in particular in fashion, if you go specific to fashion, right, there is an interesting point you earlier also said, offline versus horizontal, right? At least I find the challenge with the offline, or let me not call it a challenge, but if you think of offline, an offline store can never offer you the width or the selection that an online store can offer, specifically in a fashion kind of category. But the advantage of offline is, which online cannot offer today in the e-commerce world, is the whole buying experience of touch and feel, try, and instant or almost instant gratification, right? You go to a mall, maybe you travel for 45 minutes, you browse around, but when you find an item, you buy and you have it then and there. Right. In some sense, quick commerce is something in between. It will never offer a selection of, let's say, a Myntra, but it can offer much larger selection of the whole mall than the whole mall, or equivalent to a whole mall. But it can offer a trial room kind of experience as well. And maybe a 30-minute gratification is as instant as it gets.
So let me unpack a lot of what you said. So Rahul, I think like you said, there is an e-commerce platform which offers unlimited selection. Then there is a mall or a high street which has a set of offline stores. So why should this quick commerce for fashion, let's say, even exist? What is the value proposition over either? Why should this middling stage even exist in the first place?
So I would say 2 reasons. One is a more philosophical reason. Second is specific to this category. I think the philosophical reason is consumer mindset. Having bought so many, 3 times a day when you're buying grocery, which is coming to you in 10 minutes. The mindset is, I want it now and then. So you want stuff to come to you as quickly as possible. Right? So that I think is a mindset shift that has happened in consumers' mind, or at least in top 20, 30 cities of India. Second, specific to this category, there are some initial wedge use cases, I would say. So there are a lot of events which you're going to and you don't have the particular item. There are gifting as a use case. Not in this category, but even a company like Nest Asia, which we have in our portfolio, a large part of quick commerce buying is happening because of the last minute gifting need case. Then there are matching products. So you have a lehenga, but you don't have that particular dupatta that you want. Now, the fact that you can get it in 30 minutes or 20 minutes or whatever, that those initial wedge use cases is what you start with. But when you start experiencing it, and my assumption is mostly it will start with people who are more experimentative in nature, either younger population or people who are buying online. Once you start experiencing, then you start doing it for other use cases also. So at least that's what I feel. You have to figure out an initial wedge use case or few initial wedge use cases and then expand on top of it.
Right. I think you make 2 points. The latter is more, I think, a wedge use case led go-to-market or for customers to trial quick commerce. The first one is a more fundamental point that you make, which is this instant gratification and increasingly the need for it. Some call it the impatient economy, some call it the last-minute economy. But let me go a little deep there. There, of course, like you said, I think e-commerce does not offer instant gratification. Often, depending on where one lives, one has to wait for a few days to get the delivery. And in case one doesn't like the product, again, a few days for the returns to kick in and somebody to collect at the doorstep. So, of course, nothing comes for free. While in quick commerce, there is instant gratification. But like you said, customer has to sacrifice the selection of e-commerce. And not just that, in many cases, potentially sacrifice the pricing of e-commerce. Because the cost structure of e-commerce, at least I'm making this assumption, and I think you should challenge it if you don't agree with it, is leaner that of quick commerce. It does not have that network of dark stores. So the instant gratification is coming with trade-offs with other value proposition.
Yeah.
So do you think there are enough set of households and customers who are willing to make this trade-off?
See, obviously it will not work in every geography. As we were earlier discussing, it's a catchment area business. So in that particular, you have to find dense enough catchment area. You have to figure out what is quick for that vertical. It need not be 10 minutes. It might be 30 minutes, 60 minutes. Sometimes I have this framework that whatever time it takes for you to go to an offline store and come back to make that purchase, that if you can do better than that, that is quick for that particular category. So if in grocery it was 10 minutes to get to a grocery store, you're getting it faster here. Similarly, if you go to mall, 30-40 minutes and come back, if you can do that in, let's say, 60 minutes for the consumer, that's quicker than going within any offline experience or even e-commerce experience, right? So that is one piece. The other interesting piece, at least in this category, is that the reason why, it's not as if horizontal or a fashion commerce platform don't have enough margins. Like their commissions are in the range of 35-40%, much higher than grocery. The challenge is returns. As in, that is where it breaks the back. From what we know, some of the largest fashion commerce platforms, the returns are in the range of 30-35%. Quick commerce, at least initial data, I would say, one is that because you're getting it faster, the likelihood of returning is lower. Second is, if one can create a try and buy experience, which is similar to going to a mall in a fitting room or a trial room and trying out 5 different clothes that you liked. If those 2 factors come into play, returns can be considerably lower. And at least I would say returns could be below 10%, 8% or so. So that I would say can change the economics of the business, even if you either charge a handling fee or you charge a higher price for that item versus a discounted product online.
Understood. Very interesting. So Rahul, first of all, I think you've defined, quick may not be universal, but is a function of the category. And in that category, for the substitute, let's say for you going to the market and coming back, whatever that time is, I think that becomes at least customers' barometer for what is quick. I think you made a very, very interesting point that for a customer who, as opposed to going to the offline market and coming back, quick commerce presents an opportunity to bring the trial room to customers' doorstep. Would love for you to double click a little bit there on how will that work, and is there evidence of that working?
There are early days, but I would say that's an interest, like that is where a company who can solve it at scale will become very interesting, right? Because what does trial at home mean? Now you have to send not 5 products or not 1 product, but maybe 5 products that customer wants. Sometimes they may order 3, but you send 5. You send 1 size up or down. So you have to predict what is the right amount. And for that time, that stock is no longer there in your dark store, and your dark store is limited by space, right? This person is to go. There has to be a defined timeline in which customers to try, and then customers to return that product then and there. So you can't also not have 24-hour return. As in, you may still want that because that's what online has taught most of the consumers. So you have to then figure out another return process. So today, the whole delivery guy, the job is to as quickly go and come back so that they are available to, like from grocery, what we understand, a typical guy does like 3 deliveries in an hour. Here you can't do that, right? So you have to figure out, and actually I was going to ask you a question now that you've asked me on the economics, as in assuming the returns are lower. How do you, or at least when you were talking about this thesis, how did you think of economics? Do you think this is a profitable business anytime soon as a category, or not as much?
So Rahul, I had some comments on your previous, but let me answer the economics question. So first of all, I think quick commerce for fashion is a new category. So there is really no evidence that we can refer to. But the way I think of it is that offline, at least the good fashion stores are very, very profitable. If you see the basket size, often a customer coming to the store buys 4 to 5 items. So, I mean, there is evidence that, a lot of these fashion stores make as much as 25 to 40% EBITDA. However, e-commerce, has had some challenges with economics. I'd say predominantly 2 parts of the unit economics. One is the basket size. So unlike an offline which can potentially enjoy 4 to 5 items in the basket, typically we see 1 to 1.5 items in a online e-commerce basket, which dampens the average order value, which is of course a key metric in the unit economics. The second is the returns and RTOs. So depending on whether you're catering to men, women, the kind of fashion, the return and RTOs combined can range from 20% to as high as 40 to 50%, which has an adverse impact on the unit economics. So these have been the 2 historical issues. Now the question to ask is, what will change with the advent of quick commerce? So one is, I agree with, I think the point that you made is that often the RTOs happen because of indecisiveness on part of the customer from ordering to getting the parcel. Because in e-commerce, often that is few days. If you can provide it in under 30 minutes, under 60 minutes, there is no time for that indecision to take place or for a customer to find a better product. So, and I think in some of the companies that we have spoken to, we have learned that RTOs for quick commerce companies have been negligible to low single digits. And even returns, one of our portfolio company that we both of us work with, Outsider, they are also seeing at least returns half of that of e-commerce. And the logic is basically there is no time for the customer to feel buyer's remorse or change
Plus the
their
customer
mind.
is there at that time, right? As in, there's other piece that there is no
That's right.
waiting.
That's right.
Two times you try to deliver, stuff
Right.
doesn't come in and all.
So that is on RTO and returns. Now the second part of the puzzle is the basket size leading to AOV. So there again, I potentially think if try and buy works, and from first principles, it seems like something very interesting, then potentially the basket size might lie between e-commerce to offline, maybe between 1 to 5. So which will increase the average order value. But to be honest, that's just still in theory and yet to be proven.
Tell me, having said this, like in this category, we talked about your first point, right? I think what we are saying is that maybe horizontal quick commerce platforms, Zepto and Blinkit, will struggle on fashion. But then you have a behemoth, Myntra, right? They have launched, and now based on the numbers we know, they are close to like 20,000 orders a day. And this is, I think, in less than 6 months. So they have had an amazing scale up. They are only in few cities. Most likely they will do more cities and they become more aggressive. Given that, is there any play left for people like us to invest in, as in terms of a new fashion vertical quick commerce?
No, first of all, I must admit that Myntra now clearly is a very, very credible competition. So I think as we look to invest, that is definitely there. Of course, they are also playing in a segment of the market. The way I understand is Myntra is predominantly branded fashion and appears to the sensibilities of working audience, or let's say 25 to 45 years. I think historically Myntra, at least youth or Gen Z fashion, targeted towards college goers, early jobbers, at least historically that has not been a mainstay, and they've also recently launched a separate property to go after that, which is also an acknowledgement that the core Myntra doesn't work with that segment. So there might be a feasibility of launching a fashion quick commerce platform for these Gen Z youth. Even to the core audience of Myntra, look, I think challenger brands, has its own advantages. They may not have as much resources as Myntra, but at least they have the advantages of focus and 100% of founders' attention on this part of the business, as opposed to Myntra, where of course an employee would be heading this as a business unit.
And what about, touched upon the point that they are more focused on branded, right? Or millennial and branded combination. Like, let's say Gen Z, when you say, how would you, like one challenge we have seen, and which is why we invested in a company like Outsider, being excited about them, is lack of enough credible brands. Zudio is a one-off case, more offline, but hardly anybody in a branded way is present for that segment. So how do you build a quick commerce platform without enough brands being available out there?
Right. No, that's absolutely at least a cold start challenge. But first of all, at least let me also at least give my understanding on why that is the case. At least with some of these youth, college goers, early jobbers, it is not the brand that they look for. I think they are very, very design first in their criteria. And also affordability is important for them, because their pocket money or early salary can only take them so far. So typically they look for designs at affordable prices, and often working backward from this customer need, the answer is not brands, because they're not willing to pay a premium for brands. So which is why this market has predominantly been unbranded and design led. So I don't think that will change unless these customer needs change. So very likely the answer is that a fashion quick commerce platform going after this TG will, over a period of time, will have to build their own private labels, own brands. One example in a very different category is Firstcry, which started off as a marketplace, but then eventually rolled a bunch of their own brands, because their customer needs were similar for different reasons. Because the kids would grow very, very fast. The shelf life of the apparel would be low, leading to affordability being a key need of the customer. So at least my best bet would be it will play out like Firstcry. Eventually a majority or significant majority of the business will come from the brand's private labels.
And any initial thoughts on backend? We know we need more selection. That is very clear in a fashion kind of business. But if one were to look at a team, what would they need to excel? I have some views, but would like to get your views as well.
Again, it's a function of who you are targeting. If it is indeed this Gen Z youth. So like we had said that I think they look for, just designs and a selection. So clearly you need to optimize for that. Now in a dark store, so you need to take inventory bets. Even if you're operating in a SOR model with a backend brand, you have to deliver on the inventory turns. So merchandising or buying becomes a key capability. So I think that is key. Whoever can do that the best, I think in my mind that would be the foremost criteria to succeed. If one is targeting this segment.
Interesting. Yeah. I think the other challenge, if you stay with Gen Z one, is that because it is a price sensitive segment, likely the gross margins of the product providers or the suppliers is also going to be low. So only they can share with the platform. I think one thing we didn't talk about is potential of batching. As in, this is a category where if customer is looking for 60 minutes and post gross margin, one of the largest spend is this last mile delivery, right? Where you have to go to the customer.
Right.
If one can figure out a way to batch products.
Right.
I think the margin profile then shifts considerably, right? I think if we're doing that math, that maybe from what for a 60-minute might take 100 rupee plus per order to deliver, can reduce to 60 to 70 rupees, right? So that's the other piece that could be interesting.
Also, at least, again, I'll state a hypothesis at a high level. See, again, if we stick to the Gen Z youth, I think one of the very prominent retailers that have grown very aggressively is Tata Zudio. They also operate at relatively leaner gross margins of 40% or so. But I think they are clearly EBITDA profitable and have been very cash efficient. I think compared to the economics of Zudio, I expect two changes with an equivalent quick commerce company. The EBITDA margin or contribution margin will be further lesser because the added cost of delivery, which is the direct cost at order level. That being said, if they merchandise or buy well, their inventory or cash turns can be higher, leading to at least an equal or better ROCE profile. Again, I think Blinkit, of course, operates in a different category. But if you look at Blinkit versus a high quality offline kirana, the EBITDA profile of Blinkit in the recent quarterly results is meaningfully lesser. But the cash turns are very, very high in number, leading to a much higher ROCE than a equivalent kirana.
Very interesting. So, Mayank, continuing conversation, you just now referred to Firstcry. I'm very interested in going deeper into this whole kids and baby space. We just made an investment in a company. Again, going back to your framework, what is the need for quick here?
So one of the key tenets of whether a category is amenable for quick commerce or not is the frequency of purchase. Because eventually, from a customer's lens, they are trading off the convenience of quick delivery with potentially the selection and value that they might get in e-commerce. So till the time there is enough frequency in the use case, I think just quick commerce is not as exciting or not as meaningful to the customer. Now, if you look at the baby and kids category, if I may say so, I think I might divide this into three subsegments because these three subsegments have slightly different needs. One is the infant, which is 0 to 1 years, toddlers 1 to 3 years, and preschool goers 3 to 6 years. In all the three subsegments, the customer is the parent, often the mom, and not the kid. And there is an impaired mobility of the parent, mostly mom, because the mom has to take care of the kid. Once I think kid starts going to school 6+ years onwards, then at least the mother gets half a day off. Now, in this segment, again, the buying frequency across categories is very, very high. See, if you look at this category broadly, there are three key parts of this category. One is apparel, which is 60-65% of this category. And then there is consumables, your diapers, your wipes, your personal care products, which is again 10-15% of the category. And then another 10-15% is basically toys and games. Now, often in the infant segment, the frequency of purchase across all of these is monthly or multiple times a month. Consumables has characteristics of grocery for this category. Has immediacy. If you run out of diapers or wipes, you can't wait for 2 days. You need it now. While apparel and toys, one can argue they may not have that much immediacy, but buying frequency is often monthly. As you kind of graduate from infant to a toddler to a preschool goer, the frequency reduces incrementally. But still, I think the frequency is meaningful enough. I think in some of our interviews, we heard quarterly being the right frequency for apparel for preschool goers. But combined as a category, I think there is a meaningful buying frequency for a customer to benefit from quick commerce. I think that is one. And like I said, the other key parameter is immediacy, which at least is there for consumables. So that at least might be a good beachhead or a wedge to get customers to try you and then cross-sell other two categories.
And you talked about consumables. Why would a horizontal be not a better place? And similarly for apparel, why would an offline store not be a better place to buy from? Well, there you can do touch and feel, especially with young babies
Right.
quality of material becomes a issue. Ki us skin pe, how good will it go on the skin and all.
I'll answer the latter question first. It's easier. So at least, again, I think the value proposition over going to a nearby offline store is just the convenience of ordering online and get it delivered at doorstep. This is more relevant for the customer here whose mobility is impaired with a child being there. So, going in traffic, parking woes, coming back is inconvenient for the mom. See, historically, the mom had to do that because offline was the most efficient experience. Given kids and baby apparel is predominantly an unbranded category, and there is sensitivity around the fabric kind of clothing, the mom wanted to go to the offline store and do physical inspection. Now, if that physical inspection experience can be brought at the doorstep, much like your trial room in fashion, then at least it could be a big unlock. So imagine that, let's say, mom can pick 8 to 10 pieces of clothing online, and all the 8-10 pieces come within 60 minutes. Mom can quickly feel the fabric, do the physical inspection, and then if they like 5, they keep 5 and they send back the remaining. I think there is a value proposition over offline in that case. Now, that is not possible with e-commerce, but with quick commerce, both quick delivery and if not quick returns, instant returns can also happen.
And what about businesses like Firstcry? Is that not a challenge that they might do this?
No, so absolutely. I think as we are also investing and we have invested, I think that threat is always there. But look, I think there is a fair amount of effort that Firstcry will have to take. It is not an extension of their current business. They will have to establish a network of dark stores. They will have to take merchandising calls that in a given dark store, what merchandise to keep, because they can't leave the lakhs of selection that they have in their e-commerce warehouses. Last minute logistics is something very likely they will have to in-house, which today they don't have. They work with 3PLs. So look, they can do this, but I think there are certain capabilities that they will need to build. And look, again, I think one generic argument is that a founder versus employee running a business unit and just the focus.
Got it.
So
because I think there is also this conflict with their offline business, right? They have a good enough own store, franchise store business, few hundred of them across the country. So they get more impacted by this whole quick commerce piece happening.
Absolutely. I think that's a good point. Absolutely. I think the franchisee owners will, also create a ruckus.
The good part, at least what I like, is that, good and bad both, that at least the apparel piece is quite unbranded or lack of brands. What that means is that initially you may struggle to build credibility of the platform. But as Firstcry has shown, if you are successful, then you can have your own labels, and they are much higher gross margin business than selling somebody else's brand, right? So that makes a better unit economics. When we were doing that math,
Right.
As a fashion commerce portal, maybe you get 30-35% gross margin. But if you are running your own private label, the gross margin can be upwards of 50-55%. So
no, absolutely.
And it's not a very high fashion category, but yes, there are complexity of sizes. So yeah.
No, absolutely. I think eventually that's good for a variety of stakeholders, even for the customer, as opposed to working with unbranded inventory. If they can have predictability of size, fit, fabric, etc., I think it's a great experience for them. So over a period of time, as they build their private label portfolio, that will, as Firstcry has shown, there is a value proposition for the end customer. And like you said, two parties sharing economics, which is this platform and the underlying brand, as opposed to one enjoying both, is good economics. And the other thing I wanted to emphasize, and I think we briefly spoke about it in the fashion part, is that again, one of the key needs of this customer is affordability. They are not okay in paying up for the apparel simply because the shelf life of the apparel is limited.
The child grows.
Kid quickly outgrows it. So the parents don't want to spend as much. So working backwards from this affordability need, I suspect the economics will be hard to make work if you are a branded marketplace. The other complexity is, for this reason, brands don't exist in this segment. So it's hard to build a branded marketplace in the first place. So at least our bet is that private labels will be the large part of the portfolio at the steady state.
Yeah. And I think we were also, when we think of economics, right, we were also doing that math. Just Firstcry itself, average spend of a customer is close to $100, which is like 8,000-9,000 rupees. And AOVs are high. At least my assumption is, compared to Firstcry, you will see basket breaking happening here. So frequency will go up, but maybe it will not be at a 2,000, 2,400 rupees of average order value. But the more interesting part in my mind, at least in this category, is can a lot of your offline purchase come to a quick commerce platform? So that $100 hopefully can become, maybe $200 or $300 in a year, because of this convenience point and the selection point that we're talking about. Right?
Absolutely, and needless to say, in this category, the offline market size is huge. So even if you can take a small share of it, I think you can build a large business. I think, Rahul, you had asked another points around consumables.
Yes.
And what is the value proposition. So look, I think at least I think the head SKUs are covered in consumables category by the likes of Blinkit, etc. So there, to be honest, I mean, one value proposition is that you stock the tail SKUs, mid to tail SKUs. And that might be a value proposition for a certain cohort of customers. But to be honest, that's not a compelling one. So look, I think the company that we have backed will also have to figure out. But one strategy could potentially, theoretically, could be that think of it as a cost neutral category. So I think you subsidize the consumables category, because one of the things that we know is the customer is extremely price sensitive when it comes to diaper. 3-5 rupees here and there, and they will just move platforms. So I think that might be one strategy to adopt. But I don't have a good answer that what is the right to win in consumables.
Yeah, no. Early days, I would agree, it will be a complex problem to solve. But long term, think of it Firstcry again, right? They have private label diapers. So maybe not in all consumables, but in a lot of these consumables, you can have even private labels there as well, which again, you can offer a better pricing with similar quality.
Yes.
To the consumers. So hopefully that will work out.
Rahul, beauty is also a very interesting category. I don't believe we have met any team or company going after beauty quick commerce opportunity, but would love to get your thoughts there.
Actually, I'm very excited if somebody is building in that space, and I'll tell you why. And going back to your framework on need for quick, and then how do you differentiate against other horizontal quick commerce platform? I think the need for quick, the urgency part, is a lot of time in the makeup, fragrances category. Maybe personal care not as much. So if you think of beauty, right, or look at Nykaa, maybe 40% of the business is personal care, skincare. But then there is remaining 60%, which is highly makeup, fragrance, and other categories driven. In the second and third, there is a urgency need that happens when you run out of some particular SKU, and you want that. So that is one piece. The second one is this whole discovery need, which is similar to fashion, where people want to look at new trends, how should I do a makeup, what particular product do I need, or any new brand that has come in. So they are looking for that, and that could be another piece that, initial wedge that one can build on. This category, in that sense, and Nykaa, I think, has some few thousand SKUs. But again, to your earlier point on Pareto, maybe 50% of the business gets done the top 700, 800 SKUs. The challenge is that maybe in the skincare, let's say 200 to 300 SKUs, that may be kept by somebody like a Blinkit or Zepto. But the remaining ones are very, very hard for somebody to keep. Also, it's not a purchase that you first time make online. Like when you're buying a lipstick or a nail paint, you want to see the color. And that generally happens in an offline world, and then you start buying online. Again, going back to our point on try and buy, it will not be try and buy per se, but a way to sample different colors. So let's say you like one shade, but you sent 3 shades before and 3 shades after of that brand in a very sample kind of a manner, and then let the consumer make the purchase. Or similarly in fragrances, how do you send a paper which you can open and smell, and then say, between these three, I like this one. Those are the things that will need to happen. But I think there are some initial use cases. The category is large, and it is differentiated enough for a horizontal quick commerce platform to be able to do it.
So Rahul, you make a very interesting point that in the beauty segment, the customer has a need to discover new products, and that entire discovery or sampling is happening fully offline. You're saying there is an opportunity to move that offline to quick commerce and provide that sampling or trial experience at the doorstep and start the journey with the customer.
True.
And then also get a share of the recurring purchase of on what they have discovered.
Yeah.
Very interesting.
And also, this is also very similar to fashion, where you need a inspiration and aspiration to buy these products. And again, going back to the earlier discussion you're having, very, very hard for a catalog-based platform to do it. You need influencers to tell you, if you use this product, this is what you will look like, or skin will look like, or color will look like this on your lips and all. Those are things that are very hard for a horizontal, broad-based platform to do. So the need exists, I think. I would also say economics is attractive. Like, again, if you look at Nykaa's gross margin, it is upwards of 40%, I think 42, 43%. It's a low volumetric purchase, as in, you don't need a 3,000 square feet or a large dark store to stock. You can actually do much smaller warehouse. So to your point on economics, not only is the order level economics interesting, your store level economics could look even more interesting because of the rentals that you have at the store level. And it's a sticky category. Like, I know a lot of people who still use Nykaa, even if that particular product is available on Amazon. Partly to do with authenticity, partly just because they feel that the platform is for beauty, not for buying a tennis racket or an iPhone. So yeah, so those are the reasons I think it is interesting.
So it does seem that beauty passes the smell test, or at least our framework. No, absolutely look forward to founders building in beauty, which we have not seen thus far.
Yeah, looking forward to it.
So Rahul, at least a key variable as a part of whether the category is quick commerce or not, we spoke about is frequency. I think you spoke about immediacy, that there are those moments in time where you need the makeup or your lipstick or your kajal. But what about frequency in the category?
That's another interesting piece. If you add the skincare, personal care part, then the frequency is close to 24 to 30 times in a year. But let's say part of that will not happen on this platform. Even then, the core cohort, the buying frequency is once a month, even in an online world. If I add the offline world also, then the buying frequency is larger. So the beauty of quick commerce is that it's not taking market share only from online. It is also taking market share from offline. So between the two, I think it is another high frequency platform, which makes it, again, very attractive for vertical commerce.
Interesting. So as a summary for our audience, I think we briefly defined our framework on at least how we look at quick commerce. I think then we had discussions on two categories in more detail, which is fashion and baby and kids. We also briefly spoke about beauty. Any other categories, Rahul, that you think?
No, I think, clearly we couldn't go deep into a lot of them, but things like the whole food as a platform, they are more like QSRs, but online QSRs. We can think of InstaHelp as a platform. So, like for any home service that you need instant help in a 10-minute kind of a situation. So there are few more of these categories, but sometimes I also feel that as investors, we can only think so much. What we would love is to get some founders also to come and teach us, and hopefully with this podcast that allows us to do that. So looking forward to meeting such founders.
Absolutely. There are two categories that I'm curious about, but haven't thought deeply. One is pets, and second is at-home beauty services.
Very interesting.
But look forward to founders coming up with new categories that investors like you and me can never imagine.
Yeah, thank you.
Thank you.